Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, March 26, 2019. In this video, I want to go over the cannabis sector, some of the top holdings in MJ, which is what we're looking at here. That's the Alternative Harvest ETF. This was the first, I believe, first to market cannabis ETF, and the one I usually track. Want to go over that, and in this week, and really going forward for the time being, I'm going to start to shift, cover some more sectors that don't have a high correlation to the broad market. Individual sectors, commodities, which I've been focused on, will continue to focus on commodities, bonds. In other words, things that aren't highly correlated to the stock market. As you know, the market's now in its fifth week of testing that key 282-ish level, about 2,800 on the S&P 500, and even before it got up there to actually kiss that level 5 weeks ago, or almost 5 weeks ago, it was actually trading around the same range as it is now. So we've gone absolutely nowhere in the broad market now for what, going on close to 2 months, roughly the same, sideways trading range. And the point being that any stocks or sectors that are correlated with the broad market are probably going to move roughly sideways as well. So if you're taking a breakout in something that's highly correlated or a component of the S&P 500 or NASDAQ 100, there's a good chance that breakout isn't going to play out for a nice swing trade if the market continues to trend sideways. Again, the market's going to break one way or another sooner or later, and when it does, then we'll have probably some better trading ops on those stocks. But for now, let's just focus on some of the sectors, individual sectors, whether they're stock sectors. We'll look at commodities as well, again, bonds, and let's just dive into this one. I'm not going to go over many stocks. If you are a gold member and you want my thoughts on any individual pot stocks that I don't cover in this video, by all means just give me a nudge, bump me in the trading room, and I'll be glad to share that. All right, let's start with MJ, and you can see on this chart it's pretty, not to oversimplify things, but it's pretty much a wash, rinse, repeat thing. Looking for these divergent highs. We have divergent high here, and they lead to the major trend changes. Big divergent low down there. Nice rally there. I put here ADH, almost divergent high. Why? Because we had a little intraday spike right there. It was very fleeting. We closed the day right here where the crosshairs are. So in which case you would have had a divergent high right there. And again, it's more of the essence of the thing. Divergence is all about when prices, you have the negative divergence when prices are making higher highs or equal highs, and the indicators are making lower lows or equal lows. So there's your negative divergence right there. There's the big drop, and down here I put ADL, almost divergent low. Why? Because we had much lower low in price from this point here. Let's just circle that. This is where your divergence runs, and we had almost equal high. It was a slightly lower low, but again, it's the nature of the indicators. When you have prices making a lower low, if the indicators make higher or equal lows, then you have positive divergence, and here you had almost equal lows. So again, it's more of the essence of the pattern. What the divergence is telling you is that when momentum is waning here to the downside, that's what indicators are all about. That's what divergence is all about. So then you got the reversal. Now we have clean divergence high. This is we recently had a bearish PPO cross to confirm it. There's your negative divergence, so that's why I'm doing this video. In fact, what prompted me is yesterday, there's always back and forth in the trading room. I know there's a lot of interest in the pot stocks, and so a couple members had mentioned Cron, and I shared my chart, which I'll get to here in a second, and my thoughts, and I did say that MJ and many of the pot stocks are looking toppy in my opinion, and so that's why I want to do this video. I don't see the timing right now. I can't make a strong enough case to add this as an official short trade. And I'll say this, maybe these divergences get burned out. That's always a possibility. So if you're in the pot stocks for the long run, or say this ETF, I think the prudent thing to do would just be to raise your stop, or make sure you have a stop in place. You can see a couple levels. Before we move on and get to some of the top components of MJ, Just want to go over levels to watch. This is a pretty big level right here, give or take. It's not a hard number, but roughly in that range, about 37.26. And that is because we had this very significant top here. And this to me was a major top. I think there was a bubble, and I still believe there was, a burst in the pot stocks. Again, over time, there would be money to be made in this sector. There's a lot of promising companies out there. Some, and I said this a couple years ago, we were buying a lot of these stocks when they were penny stocks, like Aurora Cannabis, 55 cents. That was our first time we added that actually as an official trade, and it's many times that now. And a lot of the other ones that have now grown. But back then I said you would see over the next couple of years, there'll be the winners will evolve from this whole thing, and a lot of the stocks will go to the wayside, which they have. There's a lot of stocks back then that are either the low penny stock range right now, or they've just gone to the wayside. All right, so back to the chart here. As far as technicals go, in that 37.26 level, why is it important? Well, we had this topping pattern here, and it was pretty significant. Once it broke, you can see what happened. You didn't just limp down, you had a very impulsive sell-off, huge red candles, big drop, and then we came back to back test it. Support once broken becomes resistance, and almost a perfect failure at that level. Now we came full circle. We had that, ADL, almost divergent low right there, strong rally. And I often talk about, I have a term I use, I call it momentum fueled overshoot. When you have a strong trend to the upside, you tend to overshoot resistance levels. Just like to the downside, you tend to overshoot a support level and then quickly snap back above or below it. In this case, you can see it was just an intraday pop above that level. The momentum carried us through that key level there, around 37.25 or so. Closed the day right below it. Second test, tried to pop intraday, couldn't do it, failed. All right, so there's another failure there, and the point being that the more reactions you have on a resistance or support level, the more valid it is. Here was over a week of trading, consecutive candles, 1, 2, 3, 4, 5, 6 consecutive candles, failed to get there. Came up again, 3 more candles. So, I think that the point's been made, this is a key level. A lot like the broad market, we recently had a nice intra-week breakout, looked legit, big green candle, but so far MJ got smacked down again, and it's back below that level. So there's a lot of failures here. And just like the broad market, maybe it'll power on through there, maybe it'll burn through the divergences, but to me, this chart is very similar right now to that SPY, to 282-ish, is that it? 282-ish level, yeah, that I've been focusing on. Again, failure. Looked like it was going to get it. Finally, they had, looks like the bulls had taken it out, but they failed. And as I say, fewer things in trading and investing are more bearish than a failed breakout. We haven't really seen impulsive selling yet. If you start to see that, it will only confirm these divergences, and it will only confirm this failure. So what would be the next bearish development or sell signal? A break below 34.50. So there's the sector as a whole, and remember this: birds of a feather flock together. And just like a minute ago I said how the indexing works with SPY or QQQ, if Amazon, if QQQ is getting clobbered, if it goes down 30% because everyone's pulling their money out, I don't care what happens, Amazon, Apple, and Alphabet aren't going to go up 10, 20, 30% with the Qs dropping 30 because they are such top-heavy components. They will come to forced selling. It doesn't matter how good their fundamentals are at the time. Same thing will happen with the pot stocks, and that's why I'm going to go over the top holdings here for you. All right, so let's start out. That's MJ. ACB is right now, and I'm on this Alternative Harvest ETF, their website, and this is Aurora Cannabis. This was, and for the most part, to a large extent, still is one of my favorites. Yeah, this one made the cut. It was, I believe, the first time I've ever added a penny stock on, and certainly before. This is long before, but this is back in 2016 at 55 cents. I added this as both a swing trade and a long-term trend trade, and we made a lot of trades on this, almost all long side trades, a couple strategic or tactical short trades, I should say. But and again, I said the same thing back here at the time. These stocks, they just got ahead of themselves. And it's about valuation. So this has been, for the most part, and that's also why I backed off coverage on a lot of these, just a dead money trade for years since 2017. If you bought anywhere in this range, all you've seen is your money. You've gone up and down. Now it's a big range, I'll tell you that. It trades from $5.50 up to about $12. There's certainly some swing trades to be made in there, but again, this stock, someday it'll break above or below this range, and that may determine the next longer term trend. Probably be to the upside, but we'll see. It's still a big question mark on this. But right now, let's focus on what we can say with certainty, and I see a pretty somewhat clean trend line forming. So here's a level to watch if you're in ACB long or considering a position, or even looking to short it. Would be a break of that trend line, and that's also a decent level to put your stop loss order. You can see I haven't updated this chart, which I should do right now. I'll do that. All right, so here's our first support below that trend line, about 844, and then all the way down here to probably about $7 or so. But the bigger picture is, if you're in this one, keep in mind that we're approaching the top of that trading range right there. You can see that's here. I can actually put a solid line on that because those levels are so close. Yeah, there it is. All right, so that's it. So going back to 2017, that's as high as this stock gets, about 1234. It's still a ways up there. May or may not get there. Probably a lot will depend on what MJ does. So keep that in mind. But there's ACB. Let's just say right now, based on what I'm looking at, that I am mostly neutral to slightly bearish. I see a PPO cross forming. Usually when you have a bearish crossover on the PPO, I'm putting the crosshairs. You can just follow the vertical line up, and you can see what happened. There's a bearish crossover. Stay away from using PPO trying to extrapolate any useful information when the lines are flattening out like this and there's not a lot of separation. That's when you get whipsawed to death. You want to see clean separation like this. And there you had a bearish cross. You actually had divergent high right there. That was even better. That's the best, to me, the best signals that you can pull from something like the PPO or the RSI are those divergent highs and divergent lows. And we don't really have that now. We have almost divergence, but we have slightly higher highs in the PPO and RSI. Here it is against prices going up. So let's not spend too much time on this, but it is worth mentioning because, again, this is 9.62, so 10%. 1/10 of what MJ does is solely attributed to this stock, so it is worth monitoring. And at this point, like I said, I can't make a case to go long or to go short here. If I had to be one of the two, it would probably be short right now based on everything else I'm seeing. There's also a pretty large volume surge. This is indicative of a buying climax. Yeah, that's where I lean towards the downside on that one now. Next up is GWPH. This is the second largest holding in MJ, and this is GW Pharmaceuticals. And you can probably make out on the chart the most important things to note on this stock, like a lot of these, are these divergent highs. We had two divergent highs here. I don't even have them all marked. You know what? I can add one more for you back here just to show you that these divergences, more often not only do they work, but they work to call out, highlight the big moves. So there's your divergent high. That was a big drop. You want to measure it out. You can see it's from 125 down to 95 or so. So a good 25% or more drop, 30% or so. And then of course divergent high right here. There's your correction. Divergent high right there. Big correction. Almost divergence here, but not exactly. More importantly, we have this trading range. This one's been gapped up, failed at the previous high. So that's something to note right there. About 180 or so is pretty significant resistance. If it can pop that with conviction and hold above it, then it's broken out to a new all-time high, and that would be bullish. And again, we don't have negative divergence, so maybe it can do that. If not, watch this range. It's going to break one way or another. What would be very bearish would be a big gap down. something like this, a gap down with a candlestick like that, this would then be an island cluster top. You have this cluster of candlesticks, but that's it. So I'm not going to try to extract too much from this because I don't see a lot in the charts, but based on what I'm seeing in the sector and everything else, that's this one will probably go to the downside. And if it does, a first target, a natural target, would be a backfill of the gap with that blue line right there, so that arrow. And if it takes that out, I really haven't updated this chart either. It's kind of sloppy. I'm not going to try to force levels here, but I would say this yellow line down here at about 130 or so if the gap doesn't hold, assuming again a downside break. We don't really have anything, and more importantly, it's dead money right now. You go long or short this stock, you're in a trading range. The best you can do is go short at the bottom of that range around here, about 162 or so, with a stop somewhat below, but I wouldn't do that right now. Honestly, I'd probably stay away from the sector, and that's again why I'm doing this video. CRON, this is what somebody mentioned in the trading room yesterday. Here's the chart I shared. Big old divergent high on this one. This is negative divergence building all the way back here since the beginning of 2018. Divergent high, and here's the trend line to watch. It's not super well defined, but there are enough reactions. You can see it right here coming up. So what I said is this one, it's certainly in an uptrend now, primary uptrend, but again, like a lot of things right now, the recent trend and for weeks now has been sideways. So this one's really not going anywhere. This looks pretty toppy, and when you see a consolidation area like that, just like the broad market, you want to see which way it breaks. If it breaks to the downside, which everything I'm seeing in this chart tells me it most likely will, you want to see a break of both the trend line and 1870, because 1870 is a price support. So if they go, I don't see anything stopping this stock until 1320. In fact, I can tell you I will probably short this stock if it drops below 1870 and that level, because that is a big thin zone. A thin zone means there's not a lot of volume here. I'll turn on my volume price histogram. You can see that a little better. That helps you show. See, this is a thin zone right here. You can see the red and green bars, and there's a big void right here down from here to here. That's our thin zone. So a thin zone is comparable, if you will, to a gap. Sorry guys, trying to grab my box tool here. There we go. There's our thin zone, and you can see the other bar ends right here is one bar, and the bar above ends there. These bars end right back here. That, a lot like a gap, once a stock enters a thin zone, it will backfill it. And that would be a drop from 1870 or so down to 1320 or so. If I can get on there, about 30% drop. And if it can't hold that level, I'd have to tweak this a little bit. Yeah, I'd say about 950 would be your next stop, and ultimately possibly down here to 551. And don't for a second believe that this stock can't fall from 20 to 551. If you look at it this way, it went up. I'm using log scaling here. This stock went up from about $1 a share to $20 in less than, or almost $25 in less than 2 years, and it could certainly fall back down to that 550-ish level. So just don't underestimate how high up these stocks can go, or how much they can fall if the tide turns against them. Next up is CGC, that's Canopy Growth. By the way, if I didn't make mention, okay, I already told you Aurora is at 9.62, almost 10%. GW Pharmaceuticals, the second one that I covered, was about 8.5%. Kronos is almost 8% weighting, and Canopy Growth here is about it's exactly 6.69%, so almost 7% weighting. What stands out? Well, bigger picture again, a lot of these stocks are just toppy. There was so much hype that took them to valuations above where they should have been. So, this one now has been trading really. This is a large sideways range here for last year and a half or so. But when you zoom in closely, we have this symmetrical triangle pattern right here. So you can watch that downtrend line there, uptrend line there. There's some resistance all the way from about 51 and change up to those previous reaction highs right there. So let's just say here's our resistance zone overhead. this one could go either way. As the PPO is above the zero line, that's bullish. So if it can turn up here and hold that level, it keeps that uptrend intact. That would be the bullish scenario. Of course, a breakout to new all-time highs would be even better. And this one doesn't have any divergence yet, so you may have some room to go. Again, I think it's more of a mostly sideways type trading. But let's look at one potential scenario here. When I look at this chart, what stands out? Let's say we come up and try to test that previous high. It would look something like this. That might give us some really nice divergence because the indicators are lagging at this point in time. So an upside break here maybe would pop above there to suck in some more longs and blow out some shorts, then reverse, and that would give us nice big negative divergence and set the stage for a nice swing short all the way back down here to about that 24-21 level again. That's a 50, double on your money. Well, not, it depends. When you short, you have to put the money up front, but it's about a 50 or so 60% drop if that happens from there. So there's CGC again. The only actionable trade would be on a break of one of these levels down below or break above. But if you break above the triangle on the top, you still have some price resistance around 51.16. So that's not one I would really care to chase on a long side breakout. But if you're in that one, those are some levels to watch for you. All right, next one up is Tilray, TLRY. And a lot of buzz about this one, and had this sharp run up here. What was that, about from actually when it came out in the IPO here to the top, about 13, almost 1400% return in short order. A lot of hype. Again, that's just a common theme on these stocks. Just a lot of hype, overvaluation, things like that. I'll try to show you. So from there, it's been steadily moving lower since. I posted a few charts on this. We had a downtrend line here, broke out, provided a nice little trade, but most of that's been faded. Right now, I'd focus on these white trend lines. You have the downtrend line right there. You had an uptrend line here, and I posted this recently. And as this being the pattern to watch, there was your breakdown. So we took out that the uptrend line. Let me tighten it up a little bit there. Yeah, that's it. And you can see we've been moving lower since. So this one is in a bearish trend and has been since it peaked. There's no arguing that. This is a downtrend. But it is coming up. There's a key level to watch right here. Let me add this line. There you go. All right. 63.90, big level. Why? Because that was our low right here, a second low there. So really it looks like a big descending triangle pattern with this downtrend line and that level there. So if you're long that one, I can tell you right now that that's a pretty significant level, 63.90. You can also see the volume of price histogram. It shows you that almost all trades in this stock have occurred up above there. See the price histogram? Here's a bar all the way out to here, and below that, very thin. So not good if that stock drops below that level and makes an impulsive move down, a weekly close. Sometimes when you have a well-watched level, what they'll do is market makers will take it down there to run all the stops, clear it out before they reverse it. So there's no easy trick, but what will help is look for volume expansion, look for at least a daily close below that level, not just an intraday break, and then more so a weekly close would be even more bearish for that stock. Green Organic Dutchman Holdings. That's let's just take that one in. I'm looking at the Canadian symbol, but I know they have U.S. shares. And again, if you are Canadian, you want a lot of these companies are Canadian companies, so if you want the shares that are on the TSX or the Canadian Venture Exchange, just let me know and I'll be glad to do that. So here's the U.S. shares. TGODF, we had a nice, clean, beautiful falling wedge pattern. Here we go. Let me show you this. We had positive divergence right there. There's your bullish divergence confirming the wedge, and clean downtrend line. Breakout, back test, and from there, from the bottom of that back test, that thing rallied about 136%. But what happened there? Well, we had this line right here. You can see I have a reaction going all the way back here. There's a reaction, quite a few reactions here, here, reactions there. broke that support level. Support once broken becomes resistance, rallied back, failed. That validates that level. And a lot like, this is a common theme lately, false breakouts. We had a gap above, looked like the real deal, even parked a daily close above it, but could not hold that level and failed. So far, that's bearish. That is a false breakout, aka bull trap. However, the stock came and found trendline support. So this one's kind of mixed technicals, if you will. It's still above trend. So I can tell you, if it can't take that candle out from a week or so ago, and or it breaks this level. This is really your short entry here. If it breaks below that trend line, you want to see impulsive break, expanding volume. If you can get a daily close, all the better. Maybe take a partial position on the initial breakout if it looks good. But to remember, you're also failing at resistance. So there's two things in play here. Three really. The failed breakout right there, the 378 resistance level, and the uptrend line. Uptrend line has yet to be broken. That would be your sell signal. If you want to get really aggressive, you can take a short here at resistance, especially following the false breakdown. That might give you a jump on the trade, and your stop, you could put it all the way above this candle, but I would say you probably can keep it even tighter than that, maybe above the body, the top of the body of the candle right there. And so what that might do, the benefit is, and again, it's aggressive because you don't have a sell signal yet, but the benefit would be if one day this stock just gaps way down, you have a more favorable entry. So from a risk-reward perspective, I'd have to identify targets on this one. Let me just tell you right now, I think this one could come back down to this level here, about 242. And that'd be a drop of about 35%. So a short here with a stop above the body there on that candle would be about 9%. So a very attractive, or at least an attractive RR. All right, next one up would be CanTrust. CANNTRUST. There it is. So you can see the Canadian shares. .TO means it trades on the Toronto Stock Exchange. Here's your US shares. On this one, here's a chart that just speaks very clearly to me. You have, there's one I missed. You can see what I'm looking at down below, all these divergent lows, divergent highs. There was divergence on the RSI right here, and it wasn't very big, but it was enough to do the trick. So it's a simple wash, rinse, repeat. Look for these divergent highs, look for these divergent lows, and they lead to the big swing trades. The downtrend there, divergent low on the RSI, uptrend, and you didn't have PPO divergence. You had a smaller rally, and right here was your last. We had a divergent low right here. There it is on the RSI. Nice rally, divergent high, correction, divergent low, rally, and now we've come full circle. There's clean divergence. It is confirmed because the PPO is just turned down. So there's your divergence right there. And like many of these, the story is very similar. A lot of these stocks have peaked back here in late 2018. And they're still below those lows, and based on the posture of these divergences, all that, I don't think they're going to take out those highs. I think those will be the highs for a while. I think we're going to get another leg down, and we could come all the way back down to the bottom of this key right here. This is really where this stock has been trading, and that 480 is the bottom of the range. So if you're want to have what we call a runner trade, you short this one, probably your most optimal entry. Well, I'll tell you, it's actually objective here because we just broke down and back tested. So here's your breakdown of the trend line. We back tested, then put in the divergent high, but you could draw a minor trend line here if you don't want to jump the gun on this one right there. Again, it's a very minor uptrend line, not a lot of reactions, but so you short it with a stop somewhat above the recent highs, and you might be able to hold out, tuck that one away and hold out for a drop down to that 480 level, and that's about a 50% return right there if it hits that 50% drop. All right, two more to go, and then we're just going over, like I said, some of the top holdings here. Hexo Corp, HEXO. There it is. Wash, rinse, repeat stuff. Again, that's why I'm doing this video. I'm seeing more and more of these charts that look very toppy. There is your first divergent high on this chart back in early 2018. Doesn't look like much, but let's measure it out here. Let's not forget how much these stocks have moved. I'm using log scaling on my charts, so some of these drops may look minor to. That was a 42% drop right here from that divergent high in just a few weeks at that. So I'll take 42% in 3 weeks all day long, or I'll even take a small part of that. And again, that's what the charts are pricing this time around. I missed a divergent high right here. It just jumped out to me on the chart as I'm looking at it. We had right there is your negative divergence, right there, and right here. So it's odds, playing the odds, looking for patterns, doing the same thing. Divergent high correction, divergent high correction, divergent high correction, divergent high correction coming up. And I'm doing some levels for you. I'm thinking right here, this right around there looks like the first target. There's some minor support here that has to be taken out. So yeah, there's your entry. Entry would come on a break of this trend line and or that 609-ish, we'll call it $6 level. Minimum target there, it's, from 6 to 5, that'd be a nice drop right there. That would be about a 17%. Yeah, this one looks better than most. It's too bad this is at the end of the video. Hopefully, for those of you that stayed and watched this, it might be a very lucrative short for you. About 36% from where we're at now if it hits this 420 level. And I can, well, I don't want to say that's my preferred target, but if the sector starts to roll over, I think that's very doable. I can tell you these. I would expect a reaction around $5. But I think 420 is very doable, and if things get really ugly, it may come down to any one of these other levels down here. But let's just say that would be my preferred swing target now, and my minimum target there, and that's Hexo. But again, just beautiful, divergences, and you can see again what happened last few times we had these divergent highs, and measure out the scope of those corrections and take it in, with the amount of with the scope of the divergences as well. These are big divergences right here. Big divergences usually lead to big corrections. And APHRA, APHA. Okay, this one's failing at 1082 so far. Yep, so far that has capped all recent advances. We had a trend line here that was broken, not super well defined, so I shouldn't put too much of a weighting on that. And I also need to clean that up a little bit. Let's tighten that up there. Either way, we're already below that trend line. Yeah, there's some support right here as well. I need to add another line. There's a reaction low there, right here. And that's what we've been dancing on. So this one, break below 943, maybe be safe, wait for the recent lows to get taken out, about call it 925 or so. There's resistance 1082 if I can pop above that, bullish. But again, pay attention to what the sector's doing, because I really doubt this one's going to go very far if a lot of these other charts that I'm showing you play out, those bearish scenarios. And there's a downtrend line, I should say, if this one can continue to power up and take out this level and that 1263 level. By the way, roughly equal high right here. With divergence forming. So even if it pops, if it comes up and pops above 1082, and it does so anytime soon, it will do so with clear divergence in place, as you can see here, because these indicators are lagging. Even if they turn up a little bit, any pop up here, again, in the next few weeks, would be a divergent high. So there's another one that I think is going lower. And again, if I had to go long or short this stock, throw away the key for 1 year or 6 months, definitely short. Last one here, BP, and that's Corbus Pharmaceuticals. And yeah, same story. Here you go, big divergent high right here, a lot of strong negative divergence, big drop. And when I say big drop, remember these guys can move, which is, I'm going to end here on this stock. I will say this again, say it often. Beta adjusted position sizing is the key to successfully trading these stocks. If you normally would take 10,000, 50,000, whatever your number is, and go into Apple or QQQ or SPY, you take a small fraction of that. Why? Because the swings on these guys are, on these trends, I'm showing you right now, a 54% drop off this divergent high. We had a divergent low right here. There's your divergence lines, and draw them there. Positive divergence, bullish divergence from here to here, and from that divergent low up to the recent highs, well, when that divergence was a catalyst for that move, 100% return. Right here, we had a divergent high at 9/11, that 9/11 area, and that led to a drop of about 38%. All right, so you get the gist of it. Big price swings on these guys, and as such, on that too, by using a much smaller position size, it allows you to use large stops in percentage terms, which you need to. If you have a rule where you won't take more than a 5% loss or 8% loss on a stock, go somewhere else. Don't watch this video. Don't trade the pot stocks, because these swings, the trends in these things measure in the high double digits, sometimes triple digits. And if you're targeting a 50% or 100% move, you need to use a stop that measures in the low double digits there. Otherwise, the daily fluctuations in these things, the daily gyrations, are just going to clear you out, whether you're long in the right trend or short in a downtrend. The day-to-day back and forth will keep you out of that, will knock you out of that trade long before you milk the good part of it. All right, so we're going to leave it here. Oh, by the way, on that too, we already had the divergent high, the correction. Right now, I do think it goes down more. Trend indicator is still bearish, but I just don't see a great entry on this one at this time. But you can see the PPO rolling over down right at the zero line now. Let's wrap it up here. Hopefully you found it useful. And if I see any others that stand out, I'll make a point to post those in the trading room, maybe under the Cannabis stock group. And maybe if I'll keep an eye on this, and maybe we'll add one or two of these, or use the ETF MJ as official short trades soon. This has been Randy Finney with Right Side of the Chart, and I hope you enjoyed it.